Hello, Maverick traders, and welcome out to your weekly currency room. This is Ankit here, and let's break down this week's price action. Quite an exciting week. Let's break down the markets by looking at broader market analysis, then bring it down to our currency baskets, and then take a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
So as we take a look at last week, it was quite an interesting week. It had a lot of news events on the docket. But if you take a look at what really changed, well, the equity markets are sitting again all-time highs. So nothing really has changed in the broader market sentiment. The volatility remains low. We have no changes from the FOMC and Bank of Japan. Remember, here we are in this interesting times where some central banks are turning a little bit more dovish and some central banks are remaining hawkish or staying on the sideline. When we got the FOMC statement this week, that again sounded a little bit more hawkish. On the same day earlier, we had the US CPI. And if you take a look at the CPI, that did drop. Let's take a look at the numbers here. You look at it on that day, the inflation number did come lower, both the CPI and the PPI. But again, we saw a drop, overall in the expectation. But the FOMC stayed a little bit hawkish. It said, 1 month of good data is not enough. And that's really where we haven't really seen dollar break out either way to the upside or the downside. We are still range bound. So dollar was not really the big play here, despite some of that expectation. Again, if the FOMC had turned a little bit more dovish, this would have been quite a losing week, but that was not the case. Outside of that, if you take a look at Bank of Japan, guess what? No real change there either. So, when we don't get a big change, the market kind of stays the same. That's really what happened with the change for the week. Wasn't any significant when you take a look at the FOMC, the US dollar, or the Japanese yen. But we still have a lot of movements across the board outside of that. And outside of the currencies, taking a look at the crypto market, that sells off across the board. And this was, again, an ugly week in the crypto markets. Bitcoin Cash, Ethereum, Litecoin, they all are down. So the direction is now turning more negative. So I think at this point, it's better be more on the short side on the crypto than the long side. That's really what the price action is telling us. So let's just take a look at last week's review and take a look at the numbers and see which one worked the best and the worst. Now, if you take a look at the numbers, and you can see the S&P had a nice solid week, 1.41%. You can see that the World Stock Index didn't follow that. So we're definitely getting this divergence. And I think we're going to see a divergence, especially going to next week as well, where the central banks, if they cut and the FOMC stays strong, I think that's going to just keep the dollar strong, and other currencies will likely to weaken against the dollar. Now, crypto market, you can see down 7.83%. Gold did rise, but overall gold is range bound. And the oil market did rise 4.11%. Now, let's just take a look at the chart here. Well, guess what? Markets look nothing but bullish. I mean, take a look at it. We got some base here. We moved higher. Not going for another base here. So overall, even though we are far from the moving averages, these bases are acting as a nice opportunity to go long off of. So at this point, I think we'll probably get a little bit more consolidation before we can break out while the moving averages slowly catches up. That's really where we are in the equity markets. Now, let's take a look at the numbers in the currency market. You can see that the Swiss franc, now 3 weeks in a row, is being the best currency. Now, that's really a big shift. The entire 2024, the Swiss franc was being the worst currency and has really turned corners. And this is why it's important when you see currency changing its direction and getting above some key level. That's where you really have to adjust with that as well. And Swiss franc has been a great long for the last 3 weeks. Now, outside of that, you can see the big divergence. Euro this week was really weak. And this is where we have a nice opportunity on this divergence. And then we are seeing some weakness coming in some of European currencies. Remember, Euro has been relatively European currencies have been relatively strong to sideways, but then here we are seeing a change here. So I think this is worth noting that the euro and pound looking a little bit more weak here. Swiss franc, on the other hand, I would say it still stays strong. But remember, next week, we'll get into the data, like look at the schedule here. We have the S&P that's expected to cut rates. So we'll see what happens with this, but we are sitting pretty strong here. The yen and the dollar, again, they were not the big mover. And we're still relatively seeing strength in the Aussie and the Kiwi overall. So that's really where we are. I think we are looking a little bit better on these growth currencies compared to these European currencies at this moment. But the CAD is still being tied up to what the dollar does. So we're not really seeing a whole lot of divergence. So the big really opportunity here is if you pair euro against the Aussie and the Kiwi, also comparing euro against the Swiss franc or pound against the Swiss franc. That's really what the things have been moving the most. Now, taking a look at the numbers in the crypto market, look at that. Just, these are worse numbers here, especially in things like the Bitcoin and Ethereum. They usually hold much better, but you can see they're the worst performer as well. So right now, I don't love the crypto space here. This is not the right time, to expect those returns where we might get a massive breakout. I think there has been a big run, and every time we get towards that resistance, we stall. So this is not a good sign, especially if you're looking for a big run in the crypto markets. Now, let's just jump into our currency analysis and take a look at where we are with the market outlook. And here we are, +3. Like I said, nothing has changed for me as far as the market sentiment goes, but that doesn't mean there's not a whole lot happening everywhere else. This is where we are seeing, certain markets doing their own thing. So the crypto markets are doing their own thing, being very bearish. The equity markets are being pretty bullish. Now, if you take a look at the bond yields, this is another one that I found a little bit surprising. Usually we see the bond yields and the dollars sort of kind of go in the same direction. But guess what? This week, it did not happen. If you take a look at the last few days, they've been actually down. The yields have been coming down. But if you take a look at the dollar actually stays strong or, relatively holding steady. So a little bit of a divergence there. We'll see if next week, maybe we'll see a catch up in the bond yields. But that's really where, I think the dollar, I don't really love the short as a dollar. I think dollar likely to stay strong or even higher. I think that's really where we are as far as, what the central banks are telling us. And I think there's a good opportunity when we see these divergences in the monetary policy. Now, if you take a look at the crypto, and again, this is what I was talking about. They had a nice support here, had every reason to rally, but it did not. So I think at this point, we are now below the 20, below the 50. This looks a lot bearish. So this again is likely now to test that support as a basket. But if you take a look at individually, the Bitcoin the direction has turned negative now. The trend score has dropped to -2 across the board. So something to keep note of. Now, last week was a busy week, but again, look out next week. We have another busy week on the horizon. I just want to remind everybody on Wednesday, it's a holiday. So this is where the equity markets are closed and the currency market is likely to be liquid. That's really the time we don't really trade. So we really have all this to pack into Monday, Tuesday, and Thursday and Friday. So on a Monday, we have the RBA rate statement. Highly recommend to watch that. Or even if you're trading or not trading, if you are exposed to the Aussie, this is the one to pay attention to. They are not expecting to make any change, but again, it's all about what it says in the statement. And at this point, remember, the central banks are guiding, what's happening with the currency. So pay attention to that one. We have some of the U.S. Retail sales data coming out. I highly, this is one of those things that I completely put it on my schedule is all the U.S. data. That just drives a lot of movements in the currencies at this moment. Now, outside of that, we have the inflation data coming out of the UK. We have quarterly GDP data coming out from the New Zealand. So that's again coming out on a Wednesday. I'll just recommend just be careful because these two data are coming out on a Wednesday when the market liquidity won't be as high. So I don't plan on trading them. I think we'll be sticking to things that are likely to move more in normal market condition. We have the S&P, and look at that. They're expected to cut rates. And if you really take a look at the price action, the Swiss franc, well, it doesn't really reflect that. So we'll see what happens with Swiss franc next week. It looks overextended to me, but at the same time, you don't want to be jumping in front of a moving train. If you take a look at it by the book, well, cutting rates not a good sign. The Swiss franc should weaken, but at the same time, the price action looks pretty strong. So this is the one you got to be really careful about. We also have the Bank of England that coming out on the same day that morning, and again, not expecting a change there. We'll see what happened in the statement, but at this point, unless the central bank comes out a lot more hawkish, which again, I don't think outside of the US we are seeing other central banks follow the suit. Even if they come a little bit more dovish, I think that will be negative for the currency. Now, on Friday, we have a lot of economic data as far as the manufacturing and services PMI goes, and that's coming out of the Eurozone, coming out of the UK, and coming out of the US. So this is the one is likely to move a lot of the currencies, especially the euro and the US dollar. So these are the ones, again, pay attention to. Wednesday is the only day don't really love, trading because the markets are going to be closed. So the currency markets will be open, but because the more broader markets are closed, we don't really see a whole lot of movement. So we just going into Tuesday night, we're likely to see things kind of get slower a little bit here. So this is the next week outlook. Again, market remains bullish. And again, the focus is going to be on the other central banks. We have the FOMC behind us, but we are going to be looking at the data from, the economic data from the US and across the world, and looking at those central banks. We have 3 central banks next week: RBA, SNB, and Bank of England here. So a lot to digest on a short time frame here. So let's just do our currency analysis and take a look at what's really moving in cryptos, and then we'll take a look at the currency markets. Well, I'm just going to quickly go through crypto because they all look the same. The trend score is now -2. We're getting below the 20, below the 50. This is where this is where you want to be on the bearish side versus the bullish side. So this is a good time to kind of stay out of the crypto as we are experiencing this pullback. Here we are, Bitcoin Cash looks the same. Taking a look at Ethereum, take a look at big move that we had, and that's kind of turning lower as well. So all cryptos looks weak to me. Now let's get into the currencies, because this is where we are going to putting a lot of focus in. Then now take a look at the US dollar. And this is why I drawn this line last week, and I talk about that, hey, I'm not really going to be turning a lot more bullish or bearish until we really get a break out of this level. At this point, you can see we are still range bound. But at this point, I'd rather be looking for more upside in the dollar than the downside. And the reason behind it is the divergence that we're getting from this monetary policy. Take a look at that big drop that we have, and we just recovered the entire drop here. So at this point, I think next bet for me would be going for long dollar positions instead of short dollar here. So I know the trend score is 0 right now, but if this breaks out above that, if you're looking for that confirmation, I think that's the one we'll be looking for, and further breakout will fuel some of the movements there. On the other hand, the yen, well, guess what? It stays weak. We had the Bank of Japan yesterday, and as expected, they did not make any change, and it just stays weak. So this is where, as long as the dollar stays strong, I think the yen likely to be weakened, because that's where we have that carry trade going on, and then the policy divergence that we have. So I like yen to the short side, and I like dollar to the upside. Now, the third piece of the puzzle here is the Swiss franc. And take a look at this nice little high base here. And this is why these bases are very powerful. Every time you get a big run, we look for consolidation. But usually you want to look for consolidation going in towards that direction. So we had a nice, massive breakout. The direction looks pretty good. And we have the velocity score looks a +3 here. So everything looks pretty bullish here. Look for some bases here to go long into, or maybe on the sideline as we see maybe a little bit more consolidation going into the S&B. That will be on Wednesday, that will be on Thursday. Now, taking a look at the euro, this is the one that goes on the top of the list as a new short for me. Remember, this thing had been sideways. This has been underperforming the pound, but this thing is now underperforming and moving lower. So -2 here. Look, any sort of bear rallies, any sort of bases, we'll be looking to short into, or any sort of bear rallies. This is a support level that we were watching, and this is now below that level. Take a look at it on a velocity score. It looks pretty weak. So this is, again, we haven't really traded euro crosses a lot, but now I'm turning a lot more into the euro crosses here. The British pound, but guess what? This is a massive level of resistance that it broke out. and it really did fail to stay above that level. So as it's right now right at that level, as it falls below, this is where we have been long side of the pound. I think that's where we're going to be making that shift and going towards the shorter side of the pound. Now the Canadian dollar, what do you think about this one? Well, this is again the trend score is -2, but I'm going more 0 on this one because as soon as we get above this level, we will be going kind of back in the sideways range. A lot of the movement in the CAD is more tied up with the USD, and you take a look at this one, we had a massive move, and guess what? It recovered. So this velocity chart looks exactly the same as the US dollar chart. So, this is where, should I trade the dollar or the CAD? I'd rather say the dollar. So I'm not really interested in trading the CAD here. And then lastly, the Aussie and the Kiwi. Well, you can take a look at it. The Aussie's gone now sideways. Their trend score is a 0. Remember, we have the RBA rate statement on a Monday night. Well, this is the support and this is the resistance. This is the range we're looking for. A break of that support, we want to be going short. And if this goes above the resistance, we want to be going long. I think I'll make this very technical, looking for that level break. Along with those level breaks that we're looking in other currencies like the USD, that's also range bound. This is what I'll be looking for next week. And then lastly, the Kiwi. Well, as you can see, the Kiwi looks a lot better. It did have a pullback. We got a resistance here. The velocity is pulling back, but at the same time, this is above the 20, above the 50. There's still relative strength in there. So I think the focus likely to shift into some other currencies with those announcements that we have next week. So Aussie likely to be a little bit more active next week with the RBA rate statement. So this is our trend score. Remember, we have things now to more on the +2 and the -2. This is where we want to be. We are trading directionally here, so we need that direction, and I'm glad to see that we're getting things on a +2 to -2 scale. And remember, even though the dollar is on the side and the Aussie are on the 0 scale here, this has the potential to move right and left. So I think the dollar likely to move towards the right, the pound likely to move towards the left, and I think that's really where the gravity is pulling some of those currencies as the next level, to watch for. And the dollar and the Aussie, I'm kind of really sideways here. We'll see which level it breaks, and we'll go from there. And the velocity again on a day like today and yesterday, you can see the Aussie Kiwi are pulling back, but dollar is staying strong. And Swiss franc again at a +3. So these are the levels we want to be continue watching. These are the pairs we want to be looking at. And I'll be looking more currency pairs like the euro dollar or a lot of the dollar crosses here. Pairing against a pound dollar, euro dollar would be decent one to look at. So let's just jump right into possible trades ahead and let's take a look at some setups here.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
And based on the relative strength weakness we did, let's take a look at some of the setups. So as I said, I'm going to be taking a look at some of the dollar crosses. So let's just quickly jump through here. Well, you can see that a lot of the dollar crosses would not be as clear. They are range bound. But remember, as we take a look at a breakout on the dollar, this is going to break out one way or the other. At this point, we got a level of support on Aussie dollar at 65.80. So what I will do is that I'll just set some alerts. Set some alerts that if it breaks that level, even I can have a sell stop order right there. So as I want to get in as it breaks that level. Similar to what we saw in this euro dollar. You can see how nicely it went from 109 all the way down to 107. The next level of support on this one is coming around 106, and a break of that will be 105. I think that's really where we are heading in the euro dollar. Pound dollar, again, we are range bound. We are 126 on the bottom side. This one has a room to fall till it really tests that support. but I think I'd rather be in the euro dollar compared to the pound dollar. Kiwi, again, not, as you can see, Kiwi is not the one we really like on the short side. So we'll keep that aside. Dollar CAD, sideways. I mean, the only thing that looks more stronger than the dollar is the Swiss franc. So I think this is worth taking a look at some of the Swiss franc crosses. Well, first one I want to talk about is Euro Swiss franc. You can see how big of a turn that we had. We had a massive run from February all the way now to June. And remember, I was talking about this hitting that parity level that really hasn't touched that level pretty much going back, the last couple of years. So this was an important level, and you can see the moving averages are turning lower. This thing is looking a lot more bearish. So Euro Swiss franc looks pretty bearish. I like this on the further short here. What setup would I be looking for? Well, 4-hour chart does a good job at following that trend. You can see where, you get those big falls, you get bear rallies, you get some, some bases here. So as long as it stays below the 20 to 50, I like this on the short side going on a 4-hour chart. Now, outside of that, if the Aussie turns weaker, this thing looks good too. We just need to find out if the Aussie is going to be the worst one or the best one. If the Aussie is going to be the worst one, I should still like the Aussie Kiwi as well. You can see on a 4-hour chart, it's just making that little base here. If I go on a daily chart, this is just like a little bear rally setup here that we can short off of. So we don't have a lot of news on the Kiwi other than the GDP, but then with the RBA, it should set the tone for the Aussie for the rest of the week. So again, right now, I think I'd like to take a look at some of the dollar crosses early on, but later on, once we get a clarity on where the Swiss franc is going, I will be more active in those Swiss franc crosses. But the only thing that really stops me here with this S&B on the horizon. So always check the schedule and make sure that you're aware of the market conditions, you're aware of potential risks out there, so you can be more prepared. You can make that decision either to stay out, or if you're exposed, then make sure you're following good risk management and position management there. So remember, holiday short week next week. Wednesday is a holiday, so Monday, Tuesday, and Thursday, Friday, and we'll probably wrap up things, later Tuesday. Not expecting to trade on a Wednesday, so that's how we're gonna go next week. Focus again will be on central banks and economic data. So just like this week, we have a lot to go through next week, and that's again going to provide a lot of opportunities. As far as the direction goes, we have two bullish currencies, Swiss franc and Kiwi right now, and bearish as the CAD, Euro, and this Japanese yen. And then we have three currencies in the middle. So what we're going to be looking for is looking at the premise, the dollar, which is a neutral. I'll be looking for setups here, Aussie for the RBA rate statement, and even the pound for Bank of England rate statement. So looking to make that shift as we get more clarity on what the price is going to do. Till then, stay on the line, stay on the course. Make sure you are following that relative zone weakness, and make sure you're trading the right market strategy for that market conditions. Thanks for joining, everyone. See you next week. Happy trading. Bye.